Let's talk about accounting estimates. So the main theme of all of these items are these are disclosures and also sometimes subjective issues with which the auditor has to take extra care that management is properly disclosing all of these. When evaluating the accounting estimates that management uses on the financial statements, the auditor should determine if the estimates are reasonable under the circumstance. If management is building a new machine and they're saying to themselves, "Oh wow, it's a very nice machine. It's probably going to be worth $12 billion." But then you're the auditor and you come in and now this requires possibly consulting an expert, possibly just using your own knowledge, talking to other people within your firm. You're going to say to yourself, okay, that's not reasonable. The estimate should probably be more like $5 billion. There's different types of assets, different types of accounts that would be estimated, different valuation methods. Not going to go into those too much because you don't really need to know them. However, that is what we're talking about here. The auditor should determine if those estimates are reasonable under the circumstances. This is a great level of subjectivity, and there's a higher risk of fraud here because management could be trying to overstate these estimates fraudulently. But if the auditor comes in and says, hey, that's wrong, that's crazy wrong, management could just say, oh, whoopsie, sorry, we really thought it was that because it's subjective. Now, if management is caught overstating cash, there's no subjectivity there. That's an objective number, and fraud would be much more easily determined there. So just a note, something you might see in questions is that it's easier to conceal fraud or conceal the attempt at fraud through estimates because it's subjective. And if someone disagrees with you, you could just say, oh, yeah, we thought it was going to be this, but we were wrong. Sorry, we'll change it. That's a failed attempt at committing fraud, but an attempt nonetheless. The first step in this process of evaluating estimates is to obtain an understanding of how management develops its estimates. So this could just be like, first, if they just are throwing darts at the wall and determining that, that's a problem. So determine how did they develop their estimates. Ideally, it's probably using some model, right? Using some financial model or saying that, okay, here's the future cash flows, discounted cash flow, or valuation methods. You're going to just redo that. So whatever they did, first you want to just recheck how they did it, redo their formula. So like if we're talking about management's assertions, this would be recalculation, trying to confirm the valuation and accuracy of the estimate. That's the process you would do there. Also, is it the right model? Is it the right formula in order to calculate the value? That's part of the assessment here. The following are procedures that an auditor would use to evaluate the reasonableness of an accounting estimate made by management. So they would use subsequent events to determine whether the estimate was reasonable or not. If you are in February, this was an estimate for the year before. Now it's come to fruition, right? They're developing a new product. The product starts selling in February. You can look at that subsequent event of them selling the product in February and see if their original estimate was on par, in which case you can adjust the estimate because you now have an idea because of a subsequent event. You can also develop independent estimates and compare them to management's estimates. So in addition to you recalculating how management did it and making sure they did it correctly, you can also use a different valuation metric. Maybe you can use multiple valuation metrics and compare and ask management, hey, we did it this way and it's not what you got. What are your thoughts on this? You talk about it, hopefully come to an agreement. There's a disagreement. This is where we go to our communication with management and those charged with governance. You could go to those charged with governance and say, hey, we had a disagreement with management. Thinking back to those rules, you need to document any disagreements with management, whether or not they were resolved, and communicate that to those charged with governance. Just bringing it all together, every section's coming together, always making points wherever we can. Lastly, we can review management's process for developing the estimates and recreate the estimate based on the process. That's just recalculation, as I mentioned. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.